What's up guys, welcome back to my channel. This week we're reviewing a Yankee candle. We're going to be reviewing, it is Angel Wings. So let's get on the review and let me go put this out. Yeah, sorry about that. So it's just a quick review on the Yankee candle. It's a great piece to have in the, in the front room, your study, your bathroom. It just gives really good, ambiance to your room. Looks good, smells lovely. All in all, it's just a good thing to have, so yeah. What's up guys, welcome back to my channel. Today we're going to be talking about analysis, trends, things like that. We'll do a bit of chart work. But yeah, let's get into it. So, analysis. So there's two types of analysis really. Well, predominantly two types of analysis within the Forex industry. You have fundamental and then you have technical. I've chosen technical, which we'll get onto, but just a quick brief explanation of fundamental analysis. This is a typical fundamental trader would follow the news, follow the economic calendar, things like that, what's happening. So they would be influenced on the news events, the news results and things like that, and then that would help them and that would aid them within their trading. So obviously you probably wouldn't be able to predict it, but things like Brexit and
go up. Larry, what the hell are you doing? Larry, you can't just Larry,
things like that. Chinese trade war with Trump, all of that, they would have had massive influences in their trades in the market. So I just got semi-croaky. Also Vimto, madness. But yeah, so that's fundamental. So the news, technical analysis. So this is what I've chosen to study. This is what I've been studying, like I say, for about 9 to 10 months now. Technical analysis is basically where you're looking at the charts and you are focusing on them in terms of you're looking for the market behavior, the market nature, the structure, patterns, things like that. And it's like what I said previously in my other video, you're looking for those repetitions that have happened again and again and again over a source data over a long time. And you know that certain currencies and certain setups perform in a certain way, and they develop outcomes in your favor that you're expecting. Excuse me, I don't know what's going on. And so obviously within the market, price normally moves up or down or kind of continues. It ranges, it goes, sideways. That's the word I'm looking for, sideways. So you've got a bullish trend, which is a rising market, so it's rising upwards. You've got bearish, which is descending, so moving downwards, and then it's called a couple of things, but you're in a correction phase or in a ranging market, which is kind of a sideways movement. So that's the three types you can get. Right, let's get into some chart work, guys. Let's have a look. So yeah, let's go through three types of trends. Well, trends or phases in the market. I'll show you what they look like, some characteristics and how they how to react. So we jump into the charts. Not this for now, so we'll scroll over. Just to say, this is what platform I use. The platform I use is TradingView. I really like it. I'll quickly show you actually, sorry. You look at it here, it's nice and simple, it's clear. You can set it up so you can kind of declutter it. I don't trade with indicators anyway, but there's there's no crazy indicators or flashing things distracting you. It's just quite a nice simple program. I'll leave the link down below. It's free to sign up to, there's no free trial or pay anything up front or anything like that. You can just sign up and have a look. So you can check out what Tesla, Amazon, McDonald's and all those good people are doing if you want to. But yeah, so TradingView is what I use. Let's take a look at some trends. So first of all, let's look at bullish trend. So I'm just going to use some trend lines here to kind of demonstrate what they look like. So a bullish trend, what you'd see is, like I was saying, higher highs, higher lows, and a continuation of price in this certain movement. So you see here, price will come up, like so, you create higher highs and higher lows. Now obviously these are going to be picture perfect trends, which doesn't happen to all the market. But you can see here, you've got higher highs, drawing on, and you got higher lows, okay? Equally, Oh, lost some trend line. Equally for a bearish, so not a trend, I was going to say, a bearish environment, so I can't think of the word. It's not a bullish trend, it's a bearish trend, so it's declining. Yeah, I don't know what I was trying to say there. There's a price that come in, you can have some impulse down. Now here you would have lower lows, you'd have lower highs like so. And by that I mean your lower lows and your lower highs. Now typically with a trend, you'd want to see kind of 3 clear movements of this within time to kind of confirm that trend. You won't want to see something that, you know, starts to impulse up, you get 2 great, you know, like that, it's nice, and then suddenly you get something like this and other way, and then another impulse back up. That's, you know, there's no trends there at all. What you'd say that is actually a ranging market, which I shall show you now. So normally a ranging market or a correction phase or corrective market, they come after big impulses either from a bullish or a bearish market environment. So if I show you, so we'll do it with bullish. So you can see here, price is making its way up nicely, nice impulse, and then we may see something like this, right? So drawing that on, you got your one trend line there, but drew a few more on, you would say clear ascending nature, so we're in a nice bullish trend. And now we're kind of going sideways, we're kind of ranging, right? So we're in a corrective phase. Now, key point here that is that just because, you know, we are, sorry, what I'm going to say is, key point is we are still in a bullish trend. Just because there's not now, you know, a consistent, just constant ascending channel, it doesn't mean anything has changed. And what I mean by that is if you take away these trend lines, right, we redraw it. So if you looked at price for what it was, which is something like this, so you have nice ascending, then big correction. If you were looking at that, you wouldn't really say there's too much descending, you know, descending nature about it. It's all ascending, and it's all in the upwards direction. Now, one thing important with the market is you can't, you know, no one knows what's going to happen next. You cannot make assumptions and say, oh, we're in an upwards trend, we're in a downwards trend, it's bullish, it's bearish. You have to wait for the market to tell you and to show you. So what I mean by that is something like this. So here, so you have an impulse and we start to correct. Now, you look at that, and prior to that, you'd say, right, I've got my trend line dialed in, and it was respecting it quite nicely, and then suddenly we have now broken the trend line, which, yes, we have. However, some people would look at that and say, right, trends off, we're changing trends, ignore it, like that's not bullish. But that actually isn't the case at all. The market hasn't told us or shown us anything for us otherwise to believe we're still bullish. So again, if you took the trend line away, you look at that and you say, well, it's definitely ascending, but we're just in a corrective phase, okay? Now, however, if price suddenly, you know, kept correcting and then suddenly actually there's an impulse to the downside, it dropped out, then at this point you say, right, something's definitely changed in the market. I don't know if it's confirmed yet, or we need some more confirmation that this has actually changed. But until then, I'm kind of, you know, sit in my hands and just think something has changed, but I'm not too sure what. Because the amount of times you see price that drop down here, and then within the next hour or whatever time frame you're looking on, it retraces back in, and you get something like that. However, I'm saying however a lot because there's loads of things that can happen. But obviously, if price impulse down here and then started to correct, then that is clearly, no, it's not clearly, sorry, what it means is, yes, so something has changed now. We've got an impulse down, price is starting to consolidate and correct here. So after a correction or a consolidation piece like this, you would expect more movement to the given direction. So that's just a quick lesson of, you know, to say you're in a bullish market, you don't always have to have this perfect ascending channel. You will have corrections. Corrections happen. If anything, it kind of confirms a trend a lot more than this impulsive nature that can't go on forever. So if you get these nice sustained continuation pieces of momentum, it's a lot healthier. Cool. Just rewind that. I clicked a lot, didn't I? But yeah, so that was bullish and bearish, and like I said, we touched on kind of corrections, but this is what they look like within a market. They would literally just kind of go within a range, nice in a range, like so. And within these, this kind of helps us. It's these areas that help us identify what's going to happen next within the market. So we look for there's certain patterns and kind of structures within here that we look for that identify, right, price may, it's not never confirmed, never confirmed, but if you stack your confidence in your favor, so you're in the right, you've got things like a descending channel, you've got a free touch pattern, things like that. When you add it all up in your favor, you've got a lot more confidence going into the trade. Just a few things so you understand TradingView when I talk about things. You can see in the top left hand corner, I was going to point them, but you can't see my finger, can you? Top left hand corner, you can see that we're looking at Euro, US dollar. And then you see here above it's got W 1 week. W stands for 1 week, daily, 4 hour, hour, and 15. And what that's basically saying is each one of these candles represents that time frame you're looking at. So each one of these candles represent a week, a day, 4 hours, an hour, 15, and so on. Okay. So if we're looking at this one, you can quite clearly see the different trends within this market. But if we take the slightly more recent price, it's quite a good example actually what we're talking about. So you can see here that there's been a big impulse to the downside, and since that we've been in quite it's still descending. It's a lot more the corrective nature, right? So obviously big impulse down here, and since that we've been kind of correcting, albeit in a descending nature, but still corrected. Now, like we were saying earlier, you can see quite recently, actually, in the last few weeks, in February, we've had a big impulse, and we've actually broken the structure. We've broken the structure here. Now, some people might look at that and say, right, broken structure, change the trend, buy. Which obviously, if you bought, you'd be shit out of luck. Because what's happened is we've broken. So if we drew this like this, down, price is now broken. Did we get any confirmation? Did we get a correction? We got nothing. So typically what happened, it broke up, and you can see a nice retrace candle all the way back down. It actually broke the previous lows and gave us a new low. And that's now our reference point. So if we take a look here, we move down to the daily chart. You can see it slightly clearer. Big up, impulse up, back down. Now you can quite clearly see that we're in a nice corrective phase here. Now at the minute, how I'm looking at US dollar is long term, I'm looking for a buy. But currently there's still plenty of movement to see. You can see here there's still plenty of movement to come down to the downside. Key value area here to see how we react at this point. And again, if we break these lows and kind of trickle down, I'll be looking at this area for a buy. Okay. But yeah, so that's kind of what a chart looks like. Obviously, when you identify your trends and things like that. So for this price, I'm looking at it. I've looked at a weekly. I've gone down to daily. You want to, if you can, do your multi-time frame analysis. You want to get down to, once you're looking at hours, when you're in hours, you're looking for your entries and things like that. You want to be clear that if you've established a long-term trend, say you're saying, right, I'm in a massive bearish environment, bearish market, I want to look for sells. You don't really want to be going against the trend, because like I say, trend is your friend. Unless you're at very, very key areas like we are with the US dollar, where we're at quite a big low and we want to see how price reacts. Now obviously you can see here, if price breaks this, it's got a long way to go yet, but if price breaks this, then we've got nothing here. We've just got quite a lot of room to move down to the downside. But like I say, trend is your friend, stick with it if you can. It's not saying there's not valuable setups elsewhere, but it's just ideal. I think, guys, yeah, I think that's about it for this one. Don't want to overload you. So yeah, that's kind of, what do we touch on? We touched on trends, what they look like, characteristics, and then a bit of chart work. So if there's anything you want to know more detail in, just let me know. I'd appreciate some feedback if it's clear or not, or things like that. So yeah, just drop a little comment, let me know. I think next time, I mean, I've kind of noted all my notes down anyway, so we'll see what we're going to talk about next. We'll go into candlesticks. We'll talk about, you know, some candlesticks, what they mean, what different, because obviously there's indications of, okay, if this candlestick appears, that gives you a higher chance of something happening. So we'll take a look at them. I'll talk about indicators, why I don't use them, things like that. And I think that's about it for now. So yeah, unless there's anything you want to talk about Yankee candles or anything like that, we'll leave it there. I don't know why I said that, it's not like you're going to reply, is it? But you know what I mean. Just leave a comment or just drop me a message if you want to know something. And it's all good. But yeah, catch you next one. Thanks guys.